investor friends, I'm Michelle Markey, and today I'm going to talk about how there could be a bullish turn of fate for Starbucks as its stock had been languishing for a while ever since it reached a peak price of $126 per share in July 2021, and it hit a recent low of $79 per share until Wednesday, March 16, 2022, when it was announced that its current CEO, Kevin Johnson, is stepping down and retiring after almost 5 years at its helm, and the person who will be taking his place as interim CEO is its former CEO, legendary Howard Schultz, who had made Starbucks into a leading global coffee brand. And so with him taking over Starbucks again, I think that's a very bullish sign for the future, even though people are saying that they're gonna have a new CEO in the fall. But I think with Howard Schultz back in charge, I think he's gonna hopefully make a lot of good changes and improvements for Starbucks, because for me as a former Starbucks partner and now just a retail shareholder, I'm pretty excited to hear that Howard is coming back. And it's kind of funny, as Kevin Johnson is 61 years old and he's being replaced by 68-year-old Howard Schultz, and also talk about how Starbucks has been performing over the last 5 years under Kevin Johnson's reign and how it compares to how when Howard Schultz was running the show, and also share some of my thoughts of what they've been up to lately. And although none of this is investing advice, if you also enjoy learning about businesses and also studying them as potential stocks to invest in, I hope you'll consider liking and subscribing to my YouTube channel, because I try to study companies to see if they're worth investing in, and I hope this knowledge will be helpful to you just as a sort of educational, informational video. So thanks. From what I've learned so far along my investing journey, companies tend to do well when they're led by their founders, such as with Reed Hastings, who co-founded and is a co-CEO of Netflix, and he was able to help grow Netflix into one of the better media and streaming companies, and it's done way better than some of its competitors. As well as with Steve Jobs, who co-founded Apple, and he left for a while, and when he came back, he grew Apple into the version of Apple that we've all come to know and love today. And also with Howard Schultz, even though he didn't found the original Starbucks, the version that he took over and helped grow to this day is the version that we've all come to know and love as well. And say what you will about millennials spending $2,000 a year on coffee, but Howard Schultz did a really great job with Starbucks, and I have a lot of respect for that company, even though it's really hard for me to pay $4 or $5 for a cup of coffee, and I would rather only pay 11.5 cents for my cup of coffee, as I've talked about in one of my videos that you can check out. And I think that Howard Schultz is amazing because he ran Starbucks as its CEO from 1986 through 2000, and then again from 2008 through 2017, before stepping down as its chairman in 2018. And when Starbucks IPO'd in 1992, under Howard Schultz's tenure, the stock price grew by 21,000% until 2018, and that's a 210 bagger. So I think it's absolutely incredible what Howard Schultz was able to accomplish in the past, and I think that under even a brief tenure now, I think he'll still do really good things for Starbucks. And to put it in perspective of how difficult it is to repeat a similar incredible performance, we can take a look at how Starbucks has performed since April 2017 when Kevin Johnson took the CEO position. And then we can see he took over when Starbucks was trading at around $58 per share. And then it almost doubled to the $126 amount in July 2021 until recently when it hit the $79 per share low. And that basically means that he was only truly able to grow it by 36% in 5 years. And although that might not be a fair comparison, and you maybe have different points in time where you can point to the Starbucks stock doing better than other times, the harsh reality is that he was only able to grow Starbucks' stock at a compounded return of 7% per year. And this compares to the S&P 500's performance since 2017, where it did about 15% per year. So if you do that comparison, it looks like Kevin Johnson wasn't able to grow Starbucks even in in line with the performance of the overall S&P 500. And this is also incorporating the decline that we've seen in the S&P 500, and it's still done way better than Starbucks stock, by almost twice as better than Starbucks has performed. So I think that it might be convenient timing that Kevin Johnson has announced his retirement, because it looks like he wasn't able to keep its Starbucks performance going because of there being maybe a lot of challenges, like how there's labor shortages and they've had to reduce the hours of operation for Starbucks, so that reduces the amount of sales that they can generate, as well as there's also issues with how it's performing in other markets, like how sales are also slowing in its second biggest market in China, and also it has a lot of debt levels. So I'll talk a little bit more about its financials soon, but in general it seems like the time for Kevin Johnson to move on is probably ripe. And I'm sure the types of challenges that Starbucks has been facing as a publicly traded food and beverage company is similar to what other publicly traded food companies might be experiencing, but yet some other companies were able to find a way to thrive in spite of whatever obstacles there were, such as how when Brian Niccol took over as CEO for Chipotle in March 2018, he was basically able to quintuple the stock, and that is very different from the experience with Starbucks. So there might be some insights that we can learn by studying why was Chipotle able to be that much more successful in being a five-bagger compared to how Starbucks just basically inched along over the last 5 years. And that's not to take away from the great strides that Starbucks has been making, especially in the last 2 years, coming back from a lot of restaurants being shut down or having limited operations. And in a similar way to how Chipotle has increasingly integrated technology with mobile app ordering, Starbucks has been doing a lot of the same. And their Starbucks app has been doing really well. And people really like the Starbucks Rewards program. And they can redeem a lot of Starbucks stars for their favorite food and beverage items. So all of that is going really well in Starbucks' favor, and I'm sure Starbucks will increasingly rely on technology to help them reach the next level, whatever that might be for Starbucks. But at the same time, they've been beset by a number of challenges, including how a lot of Starbucks stores are trying to unionize, with 140 stores across 26 states petitioning to unionize, because for years the workforce has also been experiencing maybe lower than average wages than they'd like to have. And although maybe the average wage might be around $15 an hour, they're trying to make it go higher. And even Starbucks is trying to help make that happen, where they said that they'll be investing $1 billion through the summer of 2022 to increase annual wages and training for a lot of its hourly staff. And they're also trying to make the $17 an hour average pay be for a lot of the hourly workers. So I think that's a good step in the right direction, and maybe that will alleviate the need for unionization if Starbucks' management can help increase the pay for a lot of its workers. And I'm sure, just like how Howard Schultz helped to provide a lot of benefits like healthcare benefits and other benefits to his workers in the past, hopefully he'll recognize that people would like to have higher wages and hopefully do the right thing for a lot of Starbucks workers. And in reading Starbucks' annual letter to shareholders that came out in January 2022, it's awesome that Starbucks is striving to live up to its values and mission by encouraging diversity and inclusion, by hiring certain levels of diverse people into their jobs. And they also tied their expectations for diversity outcomes to executive compensation. So all of that is well and good, but then it seemed to not have as much candor from directly the CEO itself, because it was signed by two people, the chair, Melody Hobson, and Kevin Johnson. And something that I've learned is that you also want to look for candor in a CEO, and this just makes it questionable who this letter is really coming from. And we already know that Kevin Johnson is leaving, so we don't have to really worry about if we'll see more candor from him in the future. But it also goes to show that we should look for some qualitative and also quantitative factors in how a CEO CEO is running the company. And as I talked about in my video and how I like to pick my stocks based on how Charlie Munger and Warren Buffett pick stocks, I talked about some of the quantitative factors that we should also be on the lookout for in CEOs, such as if they're doing some insider selling. And although Kevin Johnson cooled down on some of his insider selling in 2021, he did have one more insider sell in December 2021 after his 2021 sells. And also it looked like the overall performance of Starbucks in its 5-year averages in revenue growth and earnings growth and also free cash flow growth were not that great. And also in addition to that are looking at some of other financials, like if the return on invested capital did well or not. So I'll also go into that a little bit more. And I'm sure you've heard of a term, return on investment, or ROI, and ROIC is a similar concept, measuring profitability, where a company attempts to generate returns based on using a combination of equity and debt to try to get returns on investment. And so with this ROIC figure, it's a very good quantitative measure of how a CEO is performing. And throughout most of Howard Schultz's tenure from September 2007 through September 2016, the ROIC averaged about 23.33%, which is pretty good. And that's actually excluding the super anomalous low of 0.1% in the year ending September 2013. And if we include that, it would be a 21% average. So still pretty good overall. But if we look at the last 5 years worth of ROIC for Kevin Johnson, it seemed to average only 17.6%, where it started off pretty good in 2017 through 2019 in the low 20% range. But then, of course, it cratered in 2020 to end up around 6%, and then it recovered to 14% by 2021. But overall, his ROIC averaged about 6% less as good as compared to how Howard Schultz's ROIC percentage performance was. And also we can start to quantitatively assess how well a CEO is doing in growing a company and looking at some trends in its financial performance, including its cash flows and income and balance sheet figures, such as the net cash provided by operating activities, which was much better in 2021 compared to 2020 and 2019, but not as good as the net cash they delivered in 2018. And then looking at the net earnings or income, that was much better in 2021, but still not as good as it was in 2018. And then looking at some balance sheet figures, although the total assets are up compared to the last 3 years, at the same time, their total liabilities are also overall on the up. Although 2020 was the worst for their assets and liabilities ratio, it's getting a little bit better in 2021, but overall, the total liabilities still outshine the total assets, and that's not a good sign because it shows that Starbucks is not able to deliver additional returns in taking on additional debt, and maybe that's part of the reason why the stock price has also been suffering after it had been trading at around 30 price to earnings in December 2021, and now it's trading at a 23 PE ratio. So maybe this is part of why Starbucks has been also kind of facing challenges in its stock price. And more importantly than whatever the stock price is doing in the short term, with high inflation causing the price of coffee to go up, along with workers demanding higher pay that they deserve, I'm hoping with Howard Schultz returning to the CEO post that he can provide a renewed sense of purpose and inspire the workforce, as well as continue striving toward the sustainability initiatives that Starbucks has been working on, with climate issues also posing risks to the sustainability of coffee farming, and they're also trying to partially phase out single-use cups, and hopefully that will also help the environment while making coffee more affordable to people, because I know that inflation has been a key driver in a lot of goods and services prices going up, and that might also be leading to a bit of a wage price spiral, because when workers demand higher pay, then as companies pay them more, that will also get recycled into higher costs of products products. So even though we might be facing higher coffee costs in the future, hopefully people will get better pay equity, and hopefully Howard Schultz will figure all this out, because he's got his work cut out for him until and unless he passes off the CEO position to someone else. But I'm secretly hoping he stays on, just like how Warren Buffett and Charlie Munger have worked into their 90s, but maybe Howard Schultz doesn't want to do the same. But I'm sure that Howard will encourage people to see Starbucks as the third place again, as more people are returning to office. So I'm sure that Howard will do a pretty awesome job for however long he decides to stay on as CEO. And if you enjoyed this video or learned something, please like and subscribe. And I wish you well on your journey to being the best investor you can be and getting a reasonably priced cup of joe. Till next time.